We are live. Please go ahead.
Okay. Good evening, everyone. I am Kaushal Lal Gupta from ASSOCHAM. And now, since all the speakers have joined, I'll request Mr. Lav Chaturvedi, Chairman of our National Council on Capital Market, to kindly give the welcome address and also moderate the session. Sir. Sir, you are on mute.
Hello. Thank you. Thank you. Can you hear me now?
Sir. Yes, sir.
Yeah. Okay. Well, welcome everybody. I would like to welcome my fellow panelists and all the participants. We have a very esteemed group of the panelists here today. Mr. Chauhan, Mr. Agarwal, Mr. Wadhwa, Mr. Purohit, and other panelists. And the topic is very pertinent about the role of intermediaries in the capital market. Today, obviously, we will go over each one of us will probably give some views on how the role is getting redefined. Now, clearly, we know that intermediaries is something which everybody speaks at all point of time. There is always the the discussions around direct versus going through intermediaries, and just sometime it is also about redefining the basic construct of getting the resource provider with the resource required, kind of that is the main role. And sometimes even that has to be redefined, that is that something which is happening in the most efficient manner from somebody who is providing the products or providing the resources to somebody who requires a resource or requires the funding or requires products. And we all know that this journey it's a long journey. But with the today's digital age, digital DNA, there is a lot of transparency, a lot of speed that has come. But I guess we still need to relook at this space of the role, because as we know from there's a global practice where the markets are more developed. There is a more principle based construct which is there to regulate or to or as the how the intermediaries construct gets formulated. In India, wherever we are from the capital markets perspective, it is more rule based. It is something where we are still evolving as the markets, and maybe the rule base will probably somewhere gets converged, transformed into a principle base. Because if we see, there is a lot of history, there's a lot of things that has not gone right in this space, that is also putting this whole focus on the rule base. So from that perspective, I would probably not take a lot of time. There is lots that I can say. There is a lot of conflict of interest situation that comes. There is a lot of remuneration comes. There is a lot of time whether the right selling is happening. I know the key focus of any capital market should be, and it is the ease of onboarding, investors' trust, and equitable investment opportunities, and all the intermediaries, whether it's in any player, and there is a multiple level of intermediaries that actually play a role in the capital market. So from that context, I will not take much time. I will go ahead and start with the session and take everybody's input on how do they perceive as the current role, current challenges, and most importantly for the participants, what is it that's coming, how this is going to evolve. There was some talk in recently about going direct even for the retail. From the broking perspective, there is a conversation around asset management as well. So I guess this space has a lot of curiosity. There is a lot that's going to happen. Obviously, every intermediary also have to take onus to bring the confidence of the market and to make things simple. So from that perspective, I will begin immediately without taking much time. I would request Mr. Karthik Srinivasan, who is from ICRA, to just give his views and probably tell us more about how does he see redefining the role. Over to you, sir, Mr. Srinivasan.
Thanks, Love. Intermediaries is a wide segment. There are lots and lots of intermediaries. It'll be very difficult to focus only on one and not on the other. But on a shorter aspect, if we were to look at a broader capital markets in India, capital market segments in general have exploded, if one could use the phrase over 18.
सीबी वाले को फोन कीजिए
And
शरद की बात कर रहे हैं ना
one belief is that the trend should continue for a simple reason that overall penetration levels are still far lower than global numbers. To that extent, the growth opportunities is definitely there. But at the same time, one needs to be very, very mindful of a couple of facts that the entire industry, not only capital markets, but also a lot of other industries, are facing disruptions by way of new entrants, by way of new business models. More so from a capital markets, it's been technology has been a big game changer. One of the things that we've been noticing over the last couple of years is indirectly, not so much on direct terms, but indirectly the entire industry, the intermediary industry is also going through a round of consolidation. We can say it as strong is getting stronger, weak is probably getting sidelined. Yes, exclusions are the completely disruptors who are sort of jumping onto the bandwagon. But from an existing players, we are clearly seeing these two segments. Which brings us back to the point that in addition to proficiency in the segment, I guess capital requirement does go up for any form of intermediary, if not for own business, but clearly for setting up the technological infrastructure in place. With the digital integration happening, the ask from the customer is more towards ease of doing transactions, ease of service. So for that, I guess we don't have much of a choice but to sort of raise capital and at the same time see how well can we meet various stakeholder requirements. One is not saying that it's the end of the road for people who are not digitally or technologically oriented, but it has sort of become a way of life. You just cannot ignore it. The other thing which one needs to clearly factor in this point in time is regulations are changing. We may have different views, whether it is good, bad, neutral, but the fact is across the globe, also in India, regulations for almost all market participants, whichever sect one is talking of, is changing. And it makes immense sense to be abreast of those, and accordingly, there would be a necessity to sort of tweak one's own business model to stay afloat in this business. My last point before I hand it over back is I guess what we are also seeing in the Indian context is a lot of retail participation in terms of thanks to the buoyancy in the markets. People are enamored by quick one-click transactions and all, but this is one side of the story. The other side of the story is this would definitely put a lot more of load on the service requests from these people. It's easy to do a one-click transaction, but there are a lot of other processes for which you would actually need an intermediary set. We can never look at a very buoyant capital market without intermediaries. I think that's a very euphoric or a euphemistic statement. I mean, you can't live. So a role of intermediary will definitely continue, but the profile intermediary would have to reorient himself in lines of the changing requirements. I think with that, I'll hand it over back to you, Love.
Thank you, Mr. Srinivasan. I think a lot of good points, especially what you mentioned about the capital requirement and consolidation. With a lot of points is that what is the skin in the game, and whether actually capital requirement plays both ways, whether it is in a way bringing more efficiency or in a way taking out is something that the time will tell. But that is definitely one of the impact which we are seeing. And from that, I will probably take it to our next panelist, and Ashish Bhai, Mr. Chauhan, who is here with us and can give his views and perspective as to what is it that way forward that this space will have. Over to you, sir.
Thank you, Lavji. I think broadly you covered most aspects in your initial speech. So many topics were touched which are touching everyone's heart, especially in intermediation. And all these debates are going on for now 30 years that I have been in this industry.
Correct,
and the way I look at it is today we have basically touched the surface of India.
Yep.
We have probably going to touch around 8 crore investor accounts next week at BSE.
Yep.
And so it's very large. Probably we would be larger than the farmers put together as investors. And that is, I think, going to be happening very soon. That we can also do agitations if required, if nothing else. But effectively, what has happened is, why capital markets? If you don't understand the concept of capital markets, many times we think the capital markets exist for intermediaries.
Yep.
And that's why we have all these worries and versions and all. And of course, intermediaries live out of the business. I mean, their income, their livelihood is coming out of this business. That's why many of us are more interested people and more vocal. But there is no God-given rights to intermediate everything, nor to God-given right to make money out of every aspect of it, because the life changes, technology changes, the functions that were supposed to be performed get performed by technology better than probably the intermediary. And that's why if you see, when I came in to this business on the floor trader had a great role to play. They would literally have the monopoly over going into the floor, and there used to be like a huge amount of cash spoken just to be a floor trader. And today you and I, wherever we are in the world, can be on the floor, right? When we are on a virtual floor.
That's correct.
And so that function that had to be performed is now performed by technology, right? In a scale which is unheard of.
Correct.
In the best of Harshad Mehta days, we used to do 200 crore rupees worth transactions in a day. Today, on a good day, Indian markets do 1 crore rupees of trade. India's GDP gets traded once in 2-3 days.
Once in 2-3 days.
We are not even aware. In fact, we don't want you to know. It's a best kept secret, and none of our intermediaries also want everyone else to know. But effectively, because of the automation, in those days, if you see, the brokerage used to be 2% official. 2.5% was maximum allowed. But 2% everyone used to charge. Only thing is, due through the channel, broker, sub-broker, sub-broker, next layer sub-broker put together, people used to pay large sums on top of that. What we used to have called GADA.
Correct.
Which is you buy at 100, but say you have bought at 102, nobody will know, right? So effectively, the cost of transaction used to be very large, and number of transactions were very few. Now, the cost of transactions has come down to zero. I mean, there is one brokerage which is the largest now, called Zerodha. Its name is only zero brokerage, right?
Yeah. Correct.
And they are the largest brokers, and they were not there probably 10 years back. But effectively, the volumes have gone up literally 50,000 times or 1 lakh times. And the per transaction value which in intermediate derives has come down close to zero. So effectively, the total brokerage that the industry derives has gone up probably 5, 6, 10 times, not more, although the value has gone up. And I give an example saying, when washing machines came, people thought ladies will spend less time in washing clothes. But guess what? They started washing more clothes. So effectively, when automation happened, we started trading more. Although the value derived by the intermediaries has remained not as much or has not gone up. And also it has actually decided who is going to be the winner. The best guys in those days in 94 are not the best guys today, most of them. Because the people who could figure out the technological changes, the business changes, the way it will work out in terms of the intermediation's various functions and where they can derive the value. Those guys who were nobodies are now billionaires today in the intermediation business only. And people who did not exist like Zerodha, those days have become even larger, right? So for me, the intermediaries have to understand that life is going to change. It has changed very rapidly in the last 25 years. But next 25 years is going to be even further faster change. And purpose of capital markets, many of us think it's trading. It is not. Purpose of capital markets is basically deciding on the value of asset prices and disseminating it. It is the trading, is the mechanism through which this actually happens. And that's why we think it is for trading. It is actually corporate governance which determines the value of the assets in the economy. You can trade incessantly, you can trade infinitely, and economy will not be benefited. When you get into zero-sum game, which most of us have now got into. But the country, the economy, the society gets wealth by investing long term. Today, BSE accounts for $3.3 trillion of India's wealth in equities alone, which is one-third of India's total wealth, more than one-third, almost 35%. Right? And once, imagine 145 years back, it was zero. Partnerships between unknown people to unknown people putting money into each other, it has become that $3.3 trillion. And for me, if we don't protect that, and we think our purpose as intermediaries to make people trade derivatives, this, that, whether guy understands or not, whether he gets protection or not, we'll make him trade because I get little commission. Today, the commission be zero ho gaya, boss. Correct. So for me, the intermediaries will have to think through what value we add. And if we continue to add value to the people who we interact with, who we support, who we service, then those guys will keep on ensuring that we basically continue to get our salary and our livelihood. But if those guys lose money and go away, we'll have nowhere to go, because ultimately our job is to make their wealth go up. And a little bit will come to us, right? So for me, a lot of things will happen in next 25, 30 years. But the basic purpose of capital markets has been forgotten by everyone, including sometimes I believe people who actually are running these markets. And that's where slowly we need to refocus on what is it that the wealth we add, not the trading volumes, to the industry, to the economy. And if India is prosperous, all of us will be prosperous. If India goes down, but we increase our volume by even 50,000 more times,
doesn't matter.
What is it that we are going to achieve, right? It's like running on a treadmill. You will reach same place. You will get tired.
Correct.
Right? At most you will be spending a lot of money on electricity because wo bill aayega to pata chalega. But effectively, that is the sum and substance of our current model, vis-a-vis what we should have in and what we should go. I need to actually take a call from regulators, so I will move out. But thank you very much to ASSOCHAM for calling me, and hope these deliberations are taken to the right spirit and sort of discussed even more in right spirit, saying what is that as livelihood. I mean, I derive my livelihood from this industry for the last 30 years. And I very deeply, right? I worry deeply about what is that the value we add as a group to the society.
No, very insightful, sir. I must say before you go is that the whole thing about what you said is having a purpose. That's the basic tenet. That what is the purpose of which is of what we are talking about role, and if the purpose is meaningful or it is just running the treadmill and not doing anything, then it's not sustainable. Without purpose, the journey is not sustainable, and we have seen how those journeys fall out. And if the entire supply chain or the value chain forgets the larger purpose, then it becomes that much more difficult and becomes just a margin game, which we are seeing, as you rightly said. And it's something to ponder, something to actually introspect, and some harsh call within ourselves to do something meaningful. And I think it has been, as always, have been insightful. Those points and so we definitely will continue, and we'll come back to you with more inputs. And thanks for participating. Always good to hear for your views. Thank you, sir. Thank you so much. And,
thank you, sir.
Yeah. So I'll just probably after hearing Mr. Chaun's view on more deeper purpose and the margin impact, I will go over to Mr. Agarwal, who has always been one of my favorite and can give his views on experience so far. What does he expect going forward, and what is it that we all need to collectively do as actionable? Over to you, sir.
Thank you, Love.
Thank you, sir.
It's a great day. Good evening, everyone. First of all, I must congratulate ASSOCHAM for having this seminar, Redefining Role of Intermediary in Capital Market. So, lot of intermediaries are there, like broker, investment banker, even stock exchanges, all are intermediaries. We have seen outcry system when brokers were crying like anything and doing trade. And at that time, as Mr. Ashish Chauhan has said, 2% to 3% brokerage were charged by Bombay broker to from the client. And at that time, a lot of problems were there, like bad delivery system, settlement system, outcry system. One cannot do many transactions as we are doing today. So outcry system to computerized trading, physical delivery to demat trading, badla to derivative, physical settlement to 2 days settlement. So these things has happened over the period. And recently, from 1st September, peak margin has also been introduced. Algo trade is there, HFT is there, robo advisory is there, pledge and repledge is there. So many things has been changing in the system. So what does it mean? Many incoming brokers who are tech savvy, like who is having very good digital infrastructure, is disrupting to traditional brokers. And these things are happening because in market, when investor trust is to be created, efficiency has to bring, online payment has to make, immediate payment has to make, fast, you can say. You have to give credit, online credit for your margin payments, and can increase your margin to trade more. So these things are happening. In 5 minutes you must able to open KYC. So all these are good developments, and very low brokerage, transaction cost becomes very less. So these are efficient systems. But one thing is, I am saying, earlier traditional brokers used to guide investors. So today it is faceless customer that are missing. So plus and minus both. Because investor can save money in brokerages, but sometimes he loses bigger amount in doing trade himself and no guidance, and doing wrong transaction and losing a lot of money. So pros and cons of everything. So it is guided that new trader who is doing trade, either he should be experienced one, or otherwise he should not directly come into the market. He should invest through mutual funds or through ETF or through Nifty beats and indices. So these things are there, and as one of my friends said, that lot of funds required for creating that kind of digital infrastructure. So role has been defined, redefined, like big capital is required, big infrastructure, digital infrastructure required, and competent person who is having sound knowledge in technology is now the game. So all these things is today's, you can say, these are the requirements of intermediaries. And moreover, like earlier, scam has happened, client's delivery has been used in personal transactions and taken loan on client's base. So that has been plucked away by regulators. Client delivery will not move, only pledge will be done and repledge will be done. So in this way, things are improving. Regulators is doing good job, but sometimes it happens over regulation is also there. So level playing field should be there. So that we have to see. Reforms is good, but over regulation, we have to see that level playing field should always be maintained. And today's seminar, I think audience will be benefited, like should benefit, because a lot of good speakers are there. And I can say future of this capital market is very bright. We day by day we are improving our debt market system and capital market. So we are one of the finest capital market, finest regulators, and everyone doing good job. I think today's seminar will benefit a lot to everyone, to all stakeholders. I think thank you very much, Love, for giving me the chance. I conclude here. Thank you very much. Love, you are mute.
Yeah, thank you, sir. If insightful as always, especially the couple of areas which you mentioned, which is related to the confidence building measures taken by regulators. Hopefully, there will be a lot of measures that we would probably take as an industry as well to make it a sustainable journey. And second, more important point is on the level playing field, as DAO has to ensure, because usually it kind of goes a bit in opposite direction from the capital requirement. So that usually is one area which is need to be kept an eye upon, and that was a very important point. I would just, before I go to the next panelist, would just like to welcome Mr. Sharma, who has joined us from SEBI, and on behalf of all the participants, all the panelists, and all our members, sir, would like to welcome, and would like you to assure you that we will try to put some of the thought processes and the actionable and some of the key thoughts that can probably help in redefining the role of intermediaries in the capital market, either through the regulations or through the self conduct. So thank you, sir. Welcome on everyone's behalf. So you can hear us?
Yes, I can.
Okay, thank you, sir. So now I will just go to the next panelist, Mr. Ramkumar, and Mr. Ramkumar is from CDSL, and just would like to have his views and the way forward. Over to you, Mr. Ramkumar. Mr. Ramkumar? I think there may be a connectivity issue. I just saw Mr. Ramkumar, but now...
Sir, it seems there is a bandwidth issue. So
yeah,
sir
I
is there,
that.
but internet issue is there something.
Okay,
Sir.
Yeah, I could see that from Mr. Ramkumar. Maybe we'll wait for Mr. Ramkumar. Can I request Mr. Wadhwa, sir, if you could give your views and give us a perspective on this entire intermediaries. Over to you, sir.
Thank you, Love. Good evening, everyone. Sharadji, CGM, SEBI, Ashish Chauhanji, I think he has just left.
Yeah.
So Rajji and my colleagues in the Capital Market Committee of ASSOCHAM. Thank you, Love, for organizing this event.
Yep.
As you have, Ashish ji has just mentioned, you have covered most of the area, but still, I'll start with the scope of the market and what are our roles to make it big. So one of the study I have gone through, it's by McKinsey. It says that at 2 trillion economy, our household saving was 15 lakh crore per year. So going by the simple calculation, as before COVID, buzzword was 5 trillion economy. With the simple mathematics, we are going to have incremental 40 lakh crore as household saving. So as an intermediary, we have a role to play. Say channelizing saving to investment is a basic function of capital market. When I started my career in 87 as a young chartered accountant, so my principal was Mr. Rameshwar Thakur. He was then a MOS, Minister of State for Finance. And he was close to my father. He used to say, beta capital formation hogi India ke andar bahut sari, join this capital market. We were not aware what capital formation was, but after 30 years, I can definitely say that major basic function of capital market is capital formation. Say, and intermediaries help these channelizing of funds from those who have surplus funds to those who need it. So this is a basic function of capital market. And although we have increased participation in the market, in last year itself, we used to have 4 crore demat accounts. That figure is around 7 crore. And Ashish ji was just mentioning that we are going to have 8 crore accounts, unique accounts. So this is a huge growth. But looking at the population of India, we are 130 crore population, and 7-8 crore unique account, duplicate accounts are also there. But huge scope is there. In any developing economy, this figure is not less than 15 to 20%. So going by those percentage, there is a huge scope for intermediaries in India. So we have a role to play. Definitely, I have attended few of the ISCO meetings where they mention in Tokyo recently, they say for financial inclusion and increasing the market, only way to do is financial inclusion is education. So we are doing all this process as ASSOCHAM, as a industry body. We are trying to educate the investor so that they participate in the market. So huge scope is there. Product suitability is one part, which every intermediary we have to ensure that we give products, suitable product to the real investors who are the major constituents of our market. There are stock exchanges, MIs are there, DPs are there, RTAs are there, investment bankers are there. So everyone has a role to play for the growth of our capital market. And I see there are whenever there is a structural change in the regulatory framework, so we see increased participation of the investor. So it's our regulator has been proactively participating in the growth of the markets. As Subhaji has said, just mentioned, there are certain areas where we need some easiness. Like onboarding is still an issue, although we are doing it, but reporting to different KRAs, and still there are certain hitches on onboarding processes. We have to ensure as a chamber that these whatever glitches are there, whatever these missing points are there, we approach to the regulator and ministry so that those gaps are filled up. But there is, as Swaji has just mentioned, huge scope for the capital market and for intermediary. And but what we have to see that we play our role and make sure that there is a orderly functioning of the capital market. Yeah, that's it from me.
Thank you, sir. One of the most insightful point that I took was on the entire role of increasing the savings rate, the financial savings rate itself, which probably on an as-is basis is going to go probably hopefully to 40 lakh crore and above. But if the financial savings rate itself can be helped by the financial inclusion, education, then the sky is the limit. And plus it will be more wider participation. And that I think is a very, very key point as to, provided some of the challenges of ease of onboarding and other points can be taken care of, there is a huge opportunity. And thank you so much, sir, for all your points. I can probably now request Mr. Ramkumar if now the bandwidth issue is a bit better, sir. Mr. Ramkumar, you're there?
Yes, sir.
Yeah, please, over to you, sir.
Thanks, sir. I would like to start with the basic this thing about the way in which the repository was initially thought of being set up. If we were to go back in time, we would remember the days of the exchanges when there used to be huge amount of bad deliveries, maybe 8%, 10%, whatever. So the main or moot reason why a depository was created in those days was to reduce bad debts. Bad deliveries, not bad debts, bad deliveries to the extent possible. So initially there was a good amount of resistance from people because they were not used to this new way of system. And as somebody mentioned earlier, one of the panelists mentioned earlier, people were afraid of the systems before because not many people were net savvy. But now it's kind of become an order of the day. In fact, people would prefer a demat system or a depository way of handling security transactions or transfers as compared to a physical way of working. One more thing is, as Mr. Chauhan mentioned a few minutes back, one of the primary reasons why we have probably gone ahead in terms of leaps and bounds in terms of volumes is maybe because of the convenience of the depository system that has got about in terms of trading or in terms of delivery, and also the fact that I can very easily do a buy today, sell tomorrow type of a transaction today, because a large percentage of times there will be very small percentage or negligible percentage of time when I don't get a delivery. So I can be fairly sure that if I'm getting a delivery, I'll be able to deliver that also in the market in the very next day. So this is the reason why probably people have started adopting to the depository way of functioning. That is one. Second thing, as Mr. Agarwal mentioned, now it is kind of the deposit system has been used to kind of electronically onboard customers. So some people use the word online account opening or online creation of accounts. So people have been able to be onboarded quite quickly without, as he said, face-to-face interaction. This has really helped the market in terms of this COVID times when people were not able to travel out, move out, etc. So if you see the statistics, if you see either of the exchanges and the depositories, you will find that a huge number of accounts have been opened in the last 1.5 years when the entire world was down with the pandemic and the fact that not many people were able to conduct business effectively. But here in India, the situation was quite different. In fact, the market suddenly achieved a kind of buoyancy when we started with the pandemic period, and now it's kind of in a very somebody again mentioned some time back as to how high the market will go more. So it's been adopted by the millennials, so to say, and they have been the ones who are contributing to this market, and that is why the retail participation also is quite high as compared to what it was maybe a few years back or a decade back. This is the second point. The third point is now the depository has become the kind of go-to entity or intermediary, if I may put it in the perspective of this talk that we are having, in the sense that even mutual fund holders are now adopting to holding the mutual fund units in the depository form, in the demat form, as compared to the statement of holding form that was being practiced earlier. So now slowly the people are converting from holding the SOA form to depository. That is the second point. The third point is that even the other types of assets like insurance policies or commodities, which is represented by electronic warehouse. So these are also slowly finding itself into the depository way of working. Of course, they are handled by different companies, different regulator, but the fact remains that the capital market has shown the way to the other asset classes in terms of saying that how easy it is to hold securities or any type of assets in the electronic form. So this has been used again to its advantage in the IFSC market, that is the International Financial Services market, where there are plans afoot to have every type of asset in the electronic form. So that would cover, the fixed deposits issued by the banks covered by RBI in India. There it would be the single regulator. Similarly, securities, policies, and the other types of assets. So this is the long way that the depository has gone ahead in terms of charting route for convenience and dependability in terms of doing transactions. So this is all from my side, sir, from the depository angle or point of view.
Yeah. Thank you so much, Mr. Ramkumar. And especially the last point that you mentioned, which is the repository or the depository, a unified repository or depository of the entire all financial assets. That's the eventual convergence, and IFSC has started working on it, and hopefully we'll see that happening across financial services assets, and that will be a one big step, and hopefully it will probably take up from there. So thank you so much, Mr. Ramkumar. With that, I would like to go over to our next panelist, Mr. Nand Kishore Purohit. If Mr. Purohit, if you're there, over to you, and you can probably help us not just from the intermediary perspective, but you can probably throw some light on the digital and the online that we have all spoken about. Over to you.
Mr. Purohit is not here right now. I guess there is some issue from his side, so we can invite the next speaker, sir.
Yeah, so we'll probably in that case we'll request Mr. Agarwal, again one of my favorite speaker. Would love to hear his views on this as well, especially how he thinks that way forward is going to pan out. Over to you, sir.
A very good afternoon, respected Love Chaturvedi ji, SC Agarwal ji, Narendra Vadhva ji, Pradeep Gupta ji, Ram Kumar, Sharad Sharma ji, Karthik Srinivasan, Ankit Kalra, Ankit Krishna, KL Gupta ji, Rajora ji. Thank you for, I must congratulate ASSOCHAM for undertaking this task of redefining the role of intermediaries, because this is a very unique year, particularly with the coming of the International Financial Services Centers Authority. I think the proposed role of the intermediaries is likely to become global in terms of the perspective. As of now, most of our dealers, clearing members, depository participants, investment bankers, portfolio managers, investment advisors, custodians, credit rating agencies, debenture trustees, the entire focus is primarily on Indian capital markets. However, now I feel with the setting up, just July 2021, the press release, new authority has been set up. We have the setting up of an international financial services center. And I think what change is going to come is, I think one, extensive competition, extensive competitiveness, and world-class services are likely to come to Indian citizens, and Indian door will be open to the world.
Yeah.
Many sovereign funds, pension funds, endowment funds, they are likely to come into India. We are also likely to see alternate investment funds to come into India, particularly in the area of green finance and social impact capital. Also, I think leasing is going to get a big push, particularly in the aircraft sector, particularly once the operating leases have also been classified as a financial activity. It is also very important that the role of intermediaries is also related to job creation. It is expected that they will be finance related global in-house centers created, which are likely to create at least nothing less than 50,000 jobs at the International Financial Services Center. I think in a time when many of the young youth are losing jobs, financial services sector promises a growth of 20 to 22%. This is the second highest growing sector in the country today after fast moving consumer goods. I think this is a very good thing which is coming, that is the International Financial Services Authority. It will give particularly...
Sir, Ramkumar here. Option 2 is something that is practiced in the depository world, that is security world, as well as in the commodities in the country. That is point number 1. The advantage, as Samar rightly mentioned, is that in option 2, there is a check and balance. So whether we use a DP or the depository does onboard the client directly is secondary. But what is more important is there is a check and balance in terms of the client. This is what was discussed by us, that is IFSC A and the committee member, consortium members, in the presentation we have made on Wednesday, saying that it would be better if the investor were to be given a choice, the depositor were to be given a choice of entering the package list, and for the safe deposit vault to kind of confirm the package list by way of saying these are the...
You can
Should I continue? I think Mr. Ram joined in between.
You can continue, Saurabh.
Yeah, you can join. I think Mr. Ramkumar has just, I couldn't hear him. Mr. Agarwal, you can please continue.
Yeah, so I think it was good to get some insights from Mr. Ramkumar K. And now I'll again continue. What I was saying is we are likely to have many such centers. It is just right now in Gujarat, but we are going to have places where there would be tax regime which will be having 10-year tax holiday, no GST, no capital gains tax. Such international finance tech city, it is currently in Gandhinagar in Gujarat, but I expect if it is a success, it is likely to be repeated all across India. And if it gets done, I think it will give a major push to intermediaries in India. Also, there is a lot of work going on between the IFSCA and IIM Ahmedabad, and fortunately we have led to the establishment of the International Bullion Exchange, which will be integrated with the domestic economy. This means we are going to have trading in bullion depository receipts with underlying bullion in relation to bullion spot delivery. I think the bullion based loans, bullions receivable, bullion depository receipts, it is going to get a big push in the coming times. Also, one very unique thing which I found is the creation of a variable capital company, VCC. So what we expect in times to come, what is currently happening is, in case of creation of a venture capital fund, mostly seed capital comes in and we have establishment of companies or limited liability partnerships. But now a new structure is being created and the feasibility of it is being tested. So we can expect new financially engineered companies coming in, which would be exposed to higher regulatory standards, which are currently applicable as comparable to trust. But at the same time, they would have more flexibility, which is currently unavailable in India, particularly in terms of the structures and the requirements related to net own funds. We expect that in future, the intermediaries will be sleek. They will have many much efficient offerings in terms of lending, insurance, wealth management, broking, and this will lead to disruption in the markets, particularly use of AI, IoT enabled financial services. So as SC Agarwal ji said, those companies which will invest heavily into fintech are likely to gain. Also, since we are going to go international, we would need international dispute resolution centers. So financial litigation is also likely to take place, and we will have to take measures that we maintain cordial relations in financial center also. Focus of the tomorrow is likely to be on equity and debt instruments for raising of capital as well as secondary trading, including derivative trading, non-deliverable forwards in INR foreign currency, hub for all financial funds, aircraft leasing, international bullion exchange, and fintech hub. I think this is going to be happening in coming time. What I see is the redefining of role. Apart from this, when we are doing cross-border business transactions in capital market involving foreign jurisdiction, we would need to focus a lot on risk management and internal controls. Also, maintenance of records will create a challenge, particularly under FEMA, and that what IFSCA would have to take care of. I think all of this activity is being done to comply with the principles laid down by International Organization of Securities Commission. I think we need to, as we have done in accounting, we had Indian accounting standards and now we have Ind AS, which are compatible with the International Financial Reporting Standards UK. So similarly in capital markets, we are going to have so many changes, making our financial services firms at par with the best in the world. I feel it is a very positive step taken by the government, creation of this International Financial Services Center and creation of this new authority, that is International Financial Services Centers Authority. I feel the role of the intermediaries is likely to go under a major change, with them becoming more competitive and bridging the gap between the funds and the fund users, much more simplified and used. Lastly, I would say cost is likely to come down heavily. So all the intermediaries would have to cut down on cost and maximize on efficiency. With this, I would like to end. Thank you and Jai Hind.
Thank you, sir. As always, Jai Hind, sir. So lot of points, a lot of areas you covered. From IFSC to the job creation to the influx of the foreign participation, competition, various areas. Clearly, two of the points, which is a dispute resolution as well as the VCC, stands out as something which has been tried and which probably will see how this can be strengthened further. And the last was the most important thing is, and as was discussed before, is the margins that going to continue to shrink in a world where the simplicity becomes a differentiator. That's probably one of the key things, that simplifying and easy is something that probably will be something that will differentiate. So that's a very good, insightful, sir. Thanks as always. And with this, I would like to now welcome who is the chief guest today for the keynote address. And we definitely, all participants and panelists are eager to hear the views of Mr. Sharma. What are the views and what are the inputs that we may have to take this forward. Over to you, sir. Thank you so much. Sir, you're on the.
Good evening now.
Yeah, good evening. Now we can hear you.
Audible properly now?
Yes, yes, you are audible now.
Okay. But what I find in between, Mr. Ramkumar is still speaking. I think there is some connectivity issue because I see him appearing, some message appearing on the screen that he is speaking, saying something.
Yeah, we're just trying to rectify. We've just sent the message to him.
No, I'm sorry, sir. It got unmuted. I have muted myself. I'm extremely sorry.
Oh, okay,
Somebody had
okay.
come to my room. I was speaking in between. I'm extremely sorry. Apologies to everyone.
Okay, I thought you were trying to say something, and so I should listen you first. So anyway, good evening, everyone. As most of people are aware, I have just recently joined in Mumbai as handling one of the divisions of MIRSD in SEBI, which is Market Intermediaries and Regulations and Supervision Department. So this is my first meeting as head of this department, which is directly having an interface with the market intermediaries. And earlier we used to have direct interactions. Badwaji and Suhasji would recall so many meetings had taken place in the past, but now because of this pandemic, we have become very, there is a very fast development of becoming faceless, which Subhasji was mentioning also with respect to, investors' issues. So this pandemic, besides making us faceless and making us more digitally, perfect in our handling of meetings, has also thrown a lot of challenges in the recent past. I still remember, when the lockdown was announced on 22nd of March last year, and there were a whole lot of operational disruptions. But SEBI as a whole, as you know, and the other regulators decided that financial markets should work. And we worked very hard on that. I was heading the Northern Regional Office as Regional Director, and I used to personally speak to, cabinet secretaries and the secretaries of the various states to allow members to, move around and make SEBI and financial services activity and all the intermediaries, fall under the essential categories, and many a times, all those circulars were issued. So these challenges were handled by us, and I would just try to list some of those. Like we permitted work from home, remote connectivity for intermediaries, and relaxation in certain regulatory requirements, compliance related, and filing periodical reports, and they were relaxed and for a longer time. And then we started working on many other things to ease out the effect of all those lockdowns. But this pandemic has also given us some sweet directions, I would say. Like the number of our investors in the capital market, the first time investors I am talking about, has grown up phenomenally in the last 1 year only. Most of the intermediaries have seen incremental business. Exact figures would be available with CDSL also, CDSL, because they have been the beneficiary of a very large new account opening. But this is general knowledge. And on the business side also, a lot of things had happened. I was just recently reading that GDP to market cap to GDP ratio is now 172, which is high and of course concerning also. But it shows the direction of the market, and it shows that how much money is coming and flowing into the markets, and how much the confidence people have in Indian markets now. One more data point is that our startup capital till July, which we received, was $11 billion. In the first 6 months of the year, that is till June. And now in July itself, we have received $7.9 billion, and we have surpassed China after 8 years. China got $4.8 billion only, and we got $7.9 billion in the July month itself. Of course, there is an addition from Walmart to the Flipkart kitty also, $3.6 billion. But these bursts in the activity will continue to come. And similarly, in the listing of startups, we have seen a whole lot of activity. In the recent past, Zomato has come back. Zomato has come to the market. CarTrade has come to the market, and there are a whole lot of other startups which are lined up for the raising capital from the market. Now, I would say, in fact, one more thing is one more data point. NASSCOM forecasted 450 unicorn by end of this year, but now we already have 52 unicorns in India, and they are increasing by numbers. So all this indicates that the markets are well balanced, markets are well regulated, and besides SEBI, all other regulators are working hard to keep this faith intact in the market. And for this, we have done a whole lot of things in the past, as Madhwaji mentioned, Subhaji mentioned, about certain issues like the recent SEBI circulars in the secondary market on the broker side and DP side I am talking about. So on the pledge, repledge, and power attorney related issues which were coming back and forth, and creating a lot of problems for for issues pertaining to investor grievances were handled, and this was based on our experience in the market actually. So there were certain issues with certain brokers, and there were issues of defaults. So all that experience gave us to this direction to come out with some more regulations and circulars to curtail those deviations. Similarly, if I could just read some more changes which we have done in debenture trustees also, we saw some recent default by NBFCs brought forth the issues surrounding the availability of security behind the secured bonds and enforcement of security in case of defaults. So SEBI tried to address the issues, several issues pertaining to these and surrounding the availability of underlying security by enhancing the due diligence and monitoring by the debenture trustees. And to enable the debenture trustee to take prompt action for enforcement of security in case of default in listed debt securities, SEBI mandated issuer companies to create a recovery expense fund to be used by the debenture trustees towards enforcement of security. Further, in order to strengthen the process of security creation, monitoring of securities created, and monitoring of asset cover and covenants of the non-convertible securities, a platform for security and covenant monitoring system hosted and maintained using distributed ledger technology is being developed by depositories, I believe, and the system shall be used for recording and monitoring of security created and monitoring of covenant. Similarly, in the areas of CRA and in the areas of our transfer agents and registrars, we initiated a whole lot of measures for strengthening the market regulatory regime. There are general complaints also regarding over-regulation, which some of my panelists had mentioned. And I take that, I accept that, but only the experience based on the market feedback allow us or take us to the direction of making more stringent norms for better management of the market and to make markets more safe for the investing public. And I was going through some chit chat on social media, and I found all those comments on the peak margin and kind of SEBI's being harsh and all these things. But then social media also, gave me one very beautiful insight on all this. I was just reading a small snippet on the social media. So it goes like this. It goes like this, that once in a physics class, teacher asked the students, I have just read it today. So, and it is very appropriate for today's questions which the panelists have raised. So once in a physics class, the teacher asked the students, why do we have brakes in a car or in a vehicle? So every student answered in his own manner, and the first one said to stop the car, and the second said to reduce the speed, and the third said to avoid collision. But the best answer, which was liked by the teacher, was to enable you to drive faster. You know, if you do not have the brakes, if you do not have control on your speed, how would you know how much fast you can run? So without brake, you cannot, I can assure you, you can't run your car more than 5 kilometers. So all these regulatory regime or all these regulatory changes which the regulators are bringing are for the benefit of, markets. That should be well understood, I believe. And with every change which we bring to the market, what we see is more market activity. What we see is more market volume. What we see more market innovations, and what we see is the more thriving and vibrant markets. And I am thankful to all the intermediaries who are contributing to this. Now, with all this, what we should expect from the intermediaries is what Subhashji also indicated, that he mentioned that traditional brokers used to be more oriented towards the investors. Now they are faceless systems. Yes, it is, and we have to accept the technological challenges being thrown on the regulatory system and also on the constituents of the market. That's true. So what is required is, I mean, we have to update ourselves with the technology, and it is changing very fast. Every day there are innovations in the market, be it in the financial products, be in the technology, be it in the systems which are managing it. The intermediaries have to innovate financial products also. And idea is the whole gamut of market intermediaries, as we all know, should bring more capital for the development of the country as a whole. And that is the primary purpose of this. So I would again go back to the question which Subhashji thrown. In my recent last week interaction with some market intermediaries, I asked them, I requested them, please don't be as faceless as you can. Try to contact your investors, try to have an interface with them physically rather than digitally. Not most of course, the pandemic has thrown some challenges, so we are avoiding meeting. But whenever possible, try to find out the issues, resolve their problems, and make yourself better intermediaries as every day goes by. And as somebody has said, handling ABCD, I mean, which I heard somewhere. So we have to be careful about the AI disruptions. We have to be careful about blockchains. We have to be careful about the cloud, and we have to be careful about the data challenges which are being thrown on us. So with this, my expectation is our market intermediaries would, of course, redefine their role, what they have been doing in the past, and reorient themselves with a changing, scenario and the fast changing world of financial markets, which we are seeing every day. Thank you very much.
Thank you so much, sir. Thank you for your, there were a lot of points. Obviously, one thing that we all agree, there is no ambiguity at all, is the phenomenal continuity that was provided by all the regulators to continue the financial markets of India when the entire world was grappling through the disruption of the pandemic back in March 2020. And I think that clearly demonstrates the resilience that we have amongst our regulators and the financial services industry. And I truly acknowledge that. I think the entire industry body and all the participants truly acknowledge. Clearly, some of the key points that you mentioned, especially us beating China and 80 years, is definitely, it's a music to a ear, in any aspect. You are absolutely right that it needs to be sustained, it needs to grow, and we need to ensure that we make it more broad-based into other areas as well, sir. Points well taken. We have clearly heard you on the expectation that the regulator may have from the intermediaries, and how keeping up with the technology, updating ourselves, and ensuring that going forward we ourselves evolve to the new realities and the new requirements. And it was very interesting to that you really addressed that current concern of going through the various changes, the regulatory changes that we are all going through, that all the panelists raised. And you are absolutely right that that's probably the journey. And I think that's something the inputs will definitely continue. So I think I will take an opportunity just for one point, and then I'll have our fellow panelists or Mr. Agarwal, Mr. Wadhwa to probably have any inputs or any other points that they may have for you, sir. But from the ASSOCHAM and from the participants' perspective, a lot of times we hear this piece is that as we are going to grow and as the role of intermediaries is going to be redefined, lot of things, just like how it is happening in the developed world, probably may evolve around the self-regulatory organization, the SROs, and how they gets regulated more and more. I know that journey probably have just started and it will evolve along with the Indian markets, but that is something that's always the participants are eager as to how that evolution is going to pan out. And that's just that one or two inputs that I have from the participants. But other than that, if there is any other inputs that our panelists have for you, or the questions, I would probably open it for them before you could address them. So over to you, Mr. Agarwal, Mr. Wadhwa, or anybody else that you may have. Over to you, sir.
Definitely, love.
Thank you, Sarmaji. You covered everything, everybody's query. It's very good. SEBI is doing a very fantastic job. Regulations, I told the regulations is very, very good, but sometimes a little bit over regulation is there. So that one has to look. Otherwise, we are okay with all the regulations, but we want where level playing field is not there with the intermediary, that SEBI should look it. And I think in long term, what you said is quite okay. That is good. Thank you very much. Excellent speech. You have covered each and every area of all the speakers. Thank you very much.
To add to Subhashji, thank you, Sharadji. It's always a delight to hear to you. I definitely agree with the love for SRO part. See, I mentioned that in one of the ISCO meeting, there were 30 countries. I represented India there. So out of, I think, 30, 25 jurisdiction had SRO system. So we should also think about SRO, so that first level of layering or regulation should be the organization like various associations, and then there are SEBIs there. So we should start thinking about that. Love, over to you.
Yeah, thank you. So if anybody has anything before we go back to Sharadji. Okay, Sharadji, over to you, sir. I think we're having you're the mute.
I would say that Subhashi has summed it up. Yeah. And I would again go to the car concept. So this car concept is required because this it's not over-regulation. I mean, the experience has shown us that in 1993 or 95, Subhashi started, from where we have landed now. So kind of, technology, kind of investors, the platforms, the exchanges, and the turnover and the number of scripts listed, and our integration with the world almost. And I would not forget to mention, we are also considered one of the best regulators in the world in some of the parameters. Yep. So, I mean, jokes apart, all points are well taken. Even your concept of SRO, of course, we have already some sort of that arrangement. But yes, we'll take it forward. Thank you very much.
Yeah, thank you, sir. That's a key one. We are probably, I'll probably just request if Mr. Ramkumar have anything from the. I know we spoke about the depositories and repositories and how the unified financial assets is the key. And I know that you mentioned that IFSC has started. If there is any input that you may want to have from the Indian onshore perspective, not the offshore perspective, Mr. Ram Kumar, if you want to just give some pointers.
Sir, here, no, I would, the people would be happy to know that there has been a movement towards, having a synchronized way of functioning between the Indian depository or Indian space, let me put it that way, Indian financial space and IFSC's financial space, in terms of us, going towards a situation of simultaneous listing of securities in Indian geography as well as in the IFSC geography. That is one. Second thing is I mentioned briefly about bullion, which presently is only gold and silver. There also you will be having, spot gold and silver being created through the SEBI as an intermediary, which Sharmaji, would be more aware of or in tune with. And in IFSC also we'll be having gold and silver. To that extent, there will be competing markets in Indian geography as well as in IFSC. So that is one more thing that people can use to hedge their risk on gold and silver vis-a-vis the foreign exchange fluctuation. That is one. Second thing is there are several entities which are, having situations of being eligible for LRS based investments, but because they don't have too much of contacts outside of the country, they don't really get into the rigmarole of doing investments using the LRS route. Now with IFSC very close and following the global market way of functioning, that is something that people can look at. And also similarly, the brokers and other intermediaries can look at giving the clients an option of investing in India as well as in the IFSC, which is actually a financial jurisdiction, foreign equivalent to maybe Singapore, Hong Kong, London, whatever it is. These were the 2 points which I thought we should be adding to what we already discussed.
Okay, thank you, Mr. Ram Kumar. Sir, any comment on that, sir, before we?
No, actually, I would not be giving any offhand comment because these are our inter-vertical issues.
Okay.
As you know, there are so many departments, so unless certain things are finalized or dwelled upon properly, so it would be inappropriate for me to.
Sure, absolutely. So, unless there are any other inputs from panelists, sir, today we kind of covered the entire gamut, which we started from the inputs from one of the panelists that there will be a consolidation and there will be a capital requirements that is increasing. Then it went to Mr. Chauhan, who gave good insight on how the entire role should be more purpose driven as opposed to the revenue or the top line driven, and how it's going to contribute to the larger economy. And then we also, Mr. Agarwal clearly gave views on the confidence building measure and then the level playing field, which probably would go a long way. Mr. Ram Kumar clearly gave his views not just on the IFSC and onshore, but on the larger perspective of repository and depositories, where the larger financial assets can come together and help grow the financial markets. Mr. Wadhwa spoke about the financial inclusion, education, and how it can probably help the financial savings penetration. And Mr. Agarwal then have a gamut of entire IFSC to the influx of the foreign participation, and clearly went on to the VCC and the other upcoming areas and the dispute resolution. One thing that clearly came as the common theme is the digital and the technology, and faceless and being there but not there, always there but cannot be seen. So that is something that we are all going to evolve and see that how from the delivery perspective, we just want to ensure that the delivery happen prompt without being seen. But if there is any concern, issues, anything, that we are always there. And that is
Mr.
what probably
Gupta is there. We can see him. Atul Gupta.
He just joined.
Speaker. Yeah, he has joined.
I'm just waiting for Mr. Gupta. Mr. Gupta, you're here?
Yeah, I'm available. Thank you, Agarwal Sahab. Thank you, Lavji. Yeah, please.
So, Mr. Gupta, we just want to let you know that you can probably, that you can give your views. And we have our chief guest today, Mr. Sharad Sharma from SEBI as well, who is here and listening to all our inputs. So over to you, Mr. Gupta.
Yeah, thank you. And the respected chief guest of the event and all my respected colleagues, including Agarwal Sahab, Lav Chaturvedi ji, Saurabh ji, and everybody. When we are discussing about the, I will say, the new dimensions or the redefining the role of the intermediaries, though I was hearing the views of the various colleagues. So we need to understand the this particular redefining the role with a different perspective. The one perspective which is now just being discussed by a few of our colleagues is about the technological aspect. That when we have the traditional role that the intermediaries were performing, they were well connected with the in a physical mode, in a manual mode, and all these things are there. But today, when we have the so I used to word there are the very common word which is normally being used as a fintech. So I used to call that apart from a fintech, there is a tech fin, meaning thereby that okay, you are using the technology to connect with your financial requirements. So is something that that you are enabling the technology to provide the value-added services. So now that time has come when I used to say that the ABCD we used to study in the school's time. The A stands for Apple and B stands for ball. But today, A stands for artificial intelligence, B stands for blockchain, C for cybersecurity, and D for data analytics. So what is happening that the intermediary has to redefine their roles, that today they have to adopt the technology, because in case we will not be able to adapt the technology, we all will become redundant. So it's not the case that it is the only the doctors will see the robots are doing the operations. Every section will have to see that the RPAs, the robotic process automations and other things are taking over. So routine and the repetitive things are getting outsourced to the system, and it will be the more the value added services, more the analytical services which the intermediaries also have to provide. So first take will be that in case you are using the technology, you can provide a lot of analytical services and the services of ease of doing services. So ease of access can be there. Number two, that while using the technology, they need to understand that today we are into the globalized environment we are living with. So what will happen that the moment you will enter into the technology, you will adopt the technology, you will be able to render the services not only to the Indian perspective, the Indian context, but also for a global context. So there are the norms related to the investments for the NRIs and the other colleagues, the foreign nationals, but within the norms, within the FEMA and within the all the provisions which are there. But they can always provide these services to the global society, the global clientele, that in case they are adopting the technology. So this is the one way that that they need to redefine their activities, they need to redefine themselves. The another aspect is that the product in which they are dealing. So normally the intermediaries are dealing in the traditional products. They have the experience of handling the traditional products, made with the mutual funds, made with the fixed deposits or the initial public offers, and all these things are there. But today we can witness, and the time has come when there will be the unique products, unique activities which will be emerging out. I'm just touching a point which the SEBI is working on, is about the social index. And then I propose that in the times to come, because looking into the ESG, that is environment, social and governance, globally there are the movement for the sustainability index as well. So what will happen that apart from the traditional financial market, that there will be the new products which will be emerging out. We are not today we are not too much dependent on the IPOs. There is a venture capital, there is angel investors, there are the other way of sourcing the fund, but also there are the new products or the new methodologies which are coming up in the name of the social index or the sustainability index at the global level, and what role they can play into that. So that is something that they need to reskill themselves. They need to unlearn and learn that, okay, what are the new, I will say the product or the new activities which are emerging out because of the economic evaluation of the global village. That is something that they need to look into. The third one, that they have to redefine themselves because of the that again I will combine the first and two, but in a different perspective. That what is happening that today you have a different type of competition. So earlier it was that the Saurabh ji and Love ji or Atul Gupta was competing for a product with some kind of that, okay, I am offering this additional service or something like that. But today you have the guys who are offering the entire intermediary services without any charge, without any cost, because they are building something on the valuation mode, that okay, they have this much of a customer. So what is happening that today the intermediary who are charging something or providing the certain services, tomorrow you will find yourself in a kind of a different situation when somebody is offering the same services without any cost, because they are working on a valuation model rather than they are working on a revenue model. So you have to compete with them when you are offering these kind of a services. So something you are entering into the uncharted territory because of this kind of a situation, which is you have not envisaged in a normal course of business what we are doing. So these are the three important aspects which I believe that are the challenges as well as the opportunities. So when there is always a opportunity in the challenges, but in case you can redefine yourself, in case you reorient yourself, you understand the new age jobs and you reskill your skills. So for that particular new age job. So that is something that I believe will be very, very important. I used to give an example of a toll plaza. There was a guy who was doing a ticketing on the toll plaza and he was earning his livelihood. But today we have the fast tag. So all the troubles which we were facing to cross the toll plaza is no more available. But somebody need to understand that there is a complete, there will be a job loss for that guy who was doing a ticketing. But yes, there is a new job which emerges out into this entire scenario, is a reconciliation between the toll plaza company vis-a-vis the fast tag, which so in case the guy can reskill himself with the spreadsheet or something like that, then there will be a white collar job rather than a blue collar job, and that will be he will be getting more as compared to the earlier job. But that is something that we need. Somebody has to redefine himself, reskill himself for the new age job. That is something I wish that our colleagues in the capital intermediary need to understand, that they have the global competition. They are the new products which are emerging out. There is a technology disruption which is calling every day, and then the new way of doing business is also there. So all these things are there which required something to understand, adapt and reskill. So that is my take in this particular session, and thanks to the chairman and all the colleagues for giving me this opportunity.
Thank you, Mr. Gupta. That was very crisp, and I must say that as Sharatji already said, the ABCD, we need to relearn the ABCD, going back to basics and do the ABCD part, and clearly reskilling. That goes without saying. That's how we are going to evolve and hopefully keep ourselves relevant and keep contributing. So those were the very, very relevant points. I think that they got added to our current points that we have just communicated and got the feedback from Sharatji. I think all the panelists gave some of the key points for us to now, ensure that it get imbibed into our actionable, into our deliverable, and work together. And as we saw that, okay, there may be some minor disconnect going into the definition of regulation over regulation, but we need to work together and ensure that this is a sustainable journey as more and more participants and as India goes to a 5 trillion and more, and as the retail participation and the savings rates are going to go up north, where it is, from where it is now, and benchmark to the global rates and the global penetration. So I think unless there is any other point that any other panelists may have, or Sharatji may have any input, I would probably like to now really thank, but I'll just wait if there is anybody from any other inputs from anybody. If not, I know that I'm getting a lot of positive feedback from participants. I think it was a great session. A lot of good points got discussed. We are going to put these points together and probably put a formal note together. And I would like to first thank, on behalf of all the panelists, ASSOCHAM participants, to Sharatji to really take time, give your inputs, give your insightful and clearly being there for us and in the journey. And it means a lot to us. I would like to thank all the panelists, and most importantly to all the participants to participate and to hear us out. We will continue this journey going forward. As they say, this is just the beginning and we have a long way to go. Again, would like to thank you so much. Thanks. And
thank you, Love, for conducting this seminar fantastic way. As usual, you are always conducting.
Congratulations for another great session.
Thank you. Thank you so much, sir. Thank you, everybody.
To all the valued speakers.
Thank you. Thank you. Really appreciate it. Take care.
Thanks a lot.
Stay safe.
Thank you, Sharat Sharma ji.
Please
for
stay safe.
coming to ASSOCHAM. Thank you.
Thanks,